So, in today's video, we're going to be talking about higher highs, higher lows, trends, uptrends, downtrends, consolidation, the whole shebang. I taught you how to read the candlesticks and understand what they were. Now I'm going to teach you how to read the book. I'm going to teach you the whole shebang. Well, I'm at least going to try to. So, pop this off, get on. So, again, load of candlesticks. What the fuck are we looking at? You now know what a body is. You now know what a wick is. The body is where it closed in that time frame. The wick is where price went within the hour. Forgot one thing I forgot to mention last video. We only primarily care about the bodies. So this big red candle down, this is what we want. These wicks underneath, these show us additional information, but we'll get to that later. For right now, all we're concerned about is the big thick cunts that are on the screen. So zoom it out, bring it down. A trend is very easy to spot out. So I'm not cherry picking, come all the way down to here. So on the hour time frame, this was from Thursday all the way through to late Friday, Sunday. So this was Thursday market open right the way down to the Friday when market closed. So a trend is literally that direction in which the market is going. So you can see this is one big ass downtrend, and it's very easy to see because, well, price has just gone the complete opposite direction. How do you spot it? Well, price here is pushed all the way up, got to this high. Price hasn't been at this point for a while, came all the way up, and in order to continue this high, it's had to start at the bottom, that's come up, create a high. This is higher than any of the other points it's been to. Come down, made a low. Now this is your higher high and your higher low, because this low right here is lower than your previous one. So in my text box, higher high, higher high, that's Jai. Brackets, HH. So this right here is a higher high because it broke the previous high and has come down and made a lower low. These are the predominant highs and lows, the main points of where it's gone to. So I'll draw out a lower, no, a higher low, sorry. Brackets, higher low. So these are what you're looking for to create trends in the market. So as you look now, it's created that high, created that low. Now it's pushed up, broke this previous high, created a new one. So we take this back to there. Now where's the low? Created one here, created a mini push up, push back down, that's your low. So bring that over to there. Again, it's done the same thing, pushed up, pushed down, made a low. Now it's pushed down here. Don't really matter about that in a minute. That is more of an advanced concept because that has come underneath these lows to push up. More on that later. Right now we're focusing on where the market's going. So the next high has been created all the way up here, disrespecting these highs. Same with this high. So we put that all the way up there. There we go. Now the low was created there. Well, it's here, but yeah. So that's the higher high and the higher low. But the low of this trend pushed lower than the previous one. So it's broken the trend now. It's not going to create another higher high because the previous low was disrespected. So came up, made the high, came down, made the low. and it broke down here. This is the point where it became lower than here. So then the trend has shifted. It's come all the way down to our next topic. So that's the higher highs, higher lows. This is the lower high and the lower lows. Flip it around. So it's changed. Leave this one here. Leave this one here because that's for this low. So right now we've got a change in trend. Got a lower low, lower low. So it's come down. That's your lower low. Now we're saying these words a fucking lot, so don't think that I'm talking some nonsense, trust me. Now it's come up and created a lower high because your higher high was up here. It's not managed to push above that one, so it's called a lower high. So text box, bang, lower high. Brackets, lower high. Bang. Now that's your lower high right there. Now, this is another little thing that's good to talk about called consolidation. See these periods where price comes up to level, bubbles, shoots up. Same here. Come down a bit, but within this circle here, it was bubbling. It stayed within one price range. That's called consolidation. This is essentially where market does not know where it wants to go. It's building for something. So that whenever you see a stagnant area of price action, consolidation. So it consolidated for a little bit throughout Friday and then dropped to make another lower low. So this low right here, make it bigger. This low right here at this candle was lower than this one that we were going for, which was the lower low created. Same with this higher high created. So now it's created a new low. Move that over. And then it's created a high, but it was still lower than the previous high. Starting to make sense now. Bring this over. Boom. Push down, made another low. Would you look at that? Now, what's happened here though? Price is pushed up against the lower high and made a higher high. So what does this mean now? We've made a higher high, come back down, made a higher low. Chain trend is shifting again. Come right the way back up, burst through that higher high, and then made this little tiny little low. Now, this is one signal that you need to learn, because then this can show you a trade to a new high. Boom, you can make money from that. What the fuck's going on here? We don't want none of you. Much better. Get gone. Perfect. So that's a higher high and a higher low, and a lower low and a lower high. These are your trends. Same again here. Let's go up to, now your trends, they look bigger on smaller time frames. So if you go to the 15-minute now, make it so we can see these charts. This is an area of consolidation. This is your uptrend. Went from pretty much Wednesday morning right the way to the end of the day. There's your uptrend. Same with here now. This is your downtrend. Did it made the low, made the lower high, made the low, made the lower high, made the low, made the lower high just about, and then completely dumped. But then as it dumped, it changed trend. Came all the way through, consolidated. This area is again liquidity, but that is something that you can mess about with in later episodes. Right now we're just trying to determine the direction in which the charts are going. And right now, because it's made the high, made a lower high, sorry, made a higher high, higher low, higher high, higher low, higher high. That's your trend. Now you can go through the markets, pick out these highs, pick out these lows, and determine a trend. That's the main thing that you need to determine in this video, is a trend and a trend shift. So if you can see an area, let's go all the way over here again, just so I'm finding something random. Boom. Big pull up in the market. Higher high, higher low, higher high, higher low, higher high. But then it's disrespected the higher low. It's made a low beneath the previous one. So it's disrespected that uptrend, turned to a downtrend, and now we sink. Be all and end all of that, really. Now, go through your charts, find examples of that. If you can't find them on the higher time frames, again, if you get lost, can't find your charts, double click on the right, double click on the bottom, and your charts will come back. Again, on your phone, it will be a bit easier to find because you just zoom it through your fingers. But go through it and find your trend. On a daily time frame, you can pretty much see the general trend, which is going up. This is why they say the Nasdaq and the S&P return you 12% a year on your money, because overall, from the beginning of the year, right? Let's go from the beginning of this year, February, January, right? Dip down, come all the way down here, but now it's, where was that? That was February 22. 250, and now we're pretty much at 2350. So it's gone up a considerable amount. That is your uptrend. But what we try to do as day traders is go into that hours to 15 minutes and make money within the day. There's 3 different types of traders. This is good to talk about. There's scalp trader, which is your trader that's in and out of trades within 15 to an hour. You've got your swing traders that take big positions over days, and then you've got essentially sit and hold traders that put big positions on over long periods. Now, in my opinion, you can scale up from that. If you've got bigger money to play with, you can put a trade on from the beginning of the year to the end of the year. But what we want is to use these charts to make money from trends and directions.